Hey traders, this is Blake Morrow of Forex Analytics, and you're listening to the week ahead video for June 19, 2022. Hope you all are having a great weekend, and I hope for those of you that are celebrating the Juneteenth holiday on the 19th, which will be Monday, it is a bank holiday in the US, we'll still be broadcasting the F.A.C.E show and our other Forex Analytics shows. Just want to let you all know that, but for those of you that are taking the day off, I hope you have a great 3-day weekend. Now, before I get started, I will say that we have to address like the elephant in the room right now. Oh, it's over the weekend, and the Bitcoin market has just broken 20,000 overnight. As I'm filming on Saturday morning. We are now breaking 20,000, and that's a real risk to risk assets and to the crypto space. Now, we had a conversation on the free F.A.C.E webinar or show on Friday. If you guys don't know how to get to that, let me just show it to you really quick. First of all, you can click the link if you're watching us in YouTube, the description down below. You can actually sign up for that free training that we do every day. It's a show. We have a couple of them. We got the F.A.C.E show, and then we have the Flow show, which is the European trade prep show. Those are both free. Make sure you guys tune into those every single day. On Friday, we had this conversation regarding Bitcoin, and I want to talk about it a little bit at this stage in the game. You know, most people feel that it's a direct one-to-one with risk assets, which it has been. You know, arguably it has been. If you look at Bitcoin and the way it's moved, and then you look at the S&P. They've moved almost one-to-one. At this point in time, now that Bitcoin is breaking through 20,000, you have to realize that it is a Wall Street product. It's not so much a, non-fiat currency. It'll be the next currency it's going to replace the dollar or all fiat currency. We're beyond that. It's a Wall Street tool now. And now Wall Street's goal at this stage in the game is to put as many people out as possible and take advantage of any bounce. That's what's going to happen. I doubt that the correlation is going to be as strong from this point forward. What's probably happening at this stage is you're going to get Wall Street really pushing down prices, really squeezing out all the Robert Saylors of the world, all the crypto people that have been following Real Vision and really Blockworks and all that whole group of investors that are lifelong hodlers. Those are probably the people that Wall Street's after now. And if you're one of them, you have to. I feel that there's probably going to be some more pain before there's a bounce. If you look at price action of Bitcoin, it's not even finding buyers at this point. When you break through like a key level like this, you can tell it's a bottom if you break through it and then you bounce aggressively. Buyers automatically show up when you get to that level. Price action right now is pretty bearish. It's below 20,000 and no one's buying. It just sits there. It drops a level and sits. You're probably going to have to get a capitulation move out of Bitcoin. And frankly, I don't know where that's at. I was just talking to Gareth Soloway, and he was saying 12,000. He was looking at this measured move. I think it was this measured move. That measured move. You could also think we might get another measured move that looks something like this, which would take us further, right? So somewhere in this 10 to 11,000 level, you might start to find some buyers. If you look from a Fibonacci standpoint, let me just draw out some quick extensions. The 161% extension comes in at 4,000. We're nearing the 127% extension, which might attract some buyers, but until I see like a capitulation, that means, the buyers just completely puke it out. And then, Wall Street's going to be sitting on the other end of that, sitting around ready to buy Bitcoin and take it from, let's just say it goes down to 4,000. They're going to take it back from 4,000 to 20,000. And that's a money-making machine for them. And unfortunately for Joe and Sally Public that have been buying cryptos this whole way down, they're the ones that are going to puke them up. And like I said, I doubt that we're going to have too much one-to-one correlation with the S&P and other risk assets, because probably most of the institutional traders are already out of Bitcoin already, and gotten smoked anyway. So now you've got the laggers or the retail that's probably going to get hit next. And so if you are a long-term buyer of Bitcoin, and let's say you happen to be in cash right now, and you're like, I'm just sitting around waiting for the shoe to drop to pick it up when it drops, you might be looking somewhere in the 11, 10,000, maybe even as low as 4,000. I know some of you are like, man, I don't see that happening. Is it entirely possible during the dot-com bubble that you saw stocks lose 93% of their value? In this case, Bitcoin would be down 93% by the time it hit 4,000 from its all-time highs. So again, I'm not saying that it's going there, but I think you have to be at the ready, and it's something we have to address it because it is the elephant in the room. If you look at Ethereum, I mean, Ethereum's already blown past a lot of key levels here, and I'll just look at a 161% extension of Ethereum, which is another byproduct of Bitcoin. The 161% extension of that last move higher, once we hit all-time highs and failed, will be at 242. And look, I mean, if you bought Bitcoin or if you bought Ethereum at 2,000 because you thought it was a good deal, you probably weren't expecting another 90% drop from there. And again, I'm not saying that it can happen, but I am one person that has lived through the dot-com bubble and traded through it, was stuck in the wake of it. So I've been there, done that, and I know a lot of people haven't. And so I've seen this happen in the past. We've talked a lot about it over the last few years, that this is .com 2.0. It is. .com crashed hard. And, 95 whatever percent, maybe 97% of those companies that were created back in the 1990s, they don't exist today. And they didn't exist after 2001 either. But there are ones that will emerge. You did have the Yahoos and the AOLs and the and the Microsofts and the Apples. A lot of mergers and acquisitions since then. But there's a lot that came out of the dot-com bubble. I'm sure there's going to be out of the crypto space as well. Just if you're trading crypto, just I hate to feel this way, but we've been talking about it for years. It's not like something that's new for most of us. But anyway, I just wanted to point that out because it is a big deal for those of you that are trading. Just the price action, like I said, the price action is very bearish. When you fall and you don't find any buyers, that means there's probably further selling to go. All right, so let's talk about other things in the markets. Now, before I do this, and I want to talk a little bit about, if you're watching us on YouTube. If you're watching us on YouTube, make sure you give us the thumbs up. Subscribe to the channel so you don't miss any of these week ahead videos. Make sure you subscribe to our daily shows where we give you free analysis from our team, not just myself, but our team, the F.A.C.E show, the Flow show, and then also try out Forex Analytics. It's only $1 for 10 days. And, when you do that, you'll be inside of the Forex Analytics ecosystem, the community. We have probably one of the most robust trading communities around in the market. So come check us out. Download the mobile app when you get a chance, because you get it while you're testing Forex Analytics. And I also have to mention that even if you decide that you want to stay with the light version, which is only $19 a month, you get the app and you get to listen to all the live shows that we do that's specific and dedicated for the Forex Analytics community. You still get to try the premium version for $120 a month. You still get to try that one for the next 10 days. So, check it out. Come hang out with us. I'll see you on all the shows next week. All right, let's talk first of all about the S&P. And it's been a couple weeks since I've seen you, because last weekend Greg Horvat did the analysis. So this was drawn from this is the S&P chart that we looked at 2 weeks ago. So if you go look at the week ahead video from 2 weeks ago, you're going to see this chart, and you're going to see that I drew this blue arrow, and obviously you can see that the market has actually sold off. We hit the resistance around 4,200, couldn't make it above it, and then we reversed. Now, we were talking about 2 weeks ago how we had divergent relatives or we have divergent relative strength, and markets were selling off. We were going to bounce into the sell zone. We bounced right into the sell zone, reversed like I had drawn out. And now the question is, where do we go? And I have to look at the stock market the same way that I look at Bitcoin or the crypto market right now. We are selling off and there's no buyers in sight. And that's something that, it is a risk for the markets. Do I think that sentiment is very stretched? Sure. And if you look at other markets, like you look at the NASDAQ here, you look at the Dow, we're at some pretty key levels right now. And like the Dow, for example, this is a great chart for you to see. This is the breakout point from post-COVID lockdown, fresh new high breakout. We're testing it and a 38% retracement. This is the Dow Jones Industrial Average. So we are hitting support on some major indexes. So if you look at the S&P, you might say, well, the S&P is farther away from support. For the S&P to get where the Dow's at, we're going to have to get all the way down here around 3,400, which, by the way, is the measured move of the head and shoulder pattern. Just so you guys know, this is, the measured move. Well, actually, it's a little bit further than that, I guess. Well, it depends where you measure the neckline. I measure the neckline from here, but again, it's however you decide to measure it. You can just see where we've got a little further to go in the stock market. But you all know this. We don't go straight down in one fell swoop, and we're not going to go up in one fell swoop. So right now, we've sold off pretty aggressively. I don't want to say relative strength is divergent because it's not. And I don't want to say there's any key fib levels because there isn't. But we're also approaching some, fairly important support. You can see this like support zone in the S&P right through here. Real strong support zone in the S&P. And when you have, you have the Dow that's also at, pretty critical support as well, then you've got to start paying attention that the broad markets might bounce. One of the other things that's suggesting that the broad market might bounce is the dollar. The dollar index, we had a false breakout, and any which way you slice it, there's a false breakout above the highs. Did we bounce on Friday? Sure, we did. Should we struggle when we get back to 105? I think so. And really, on a longer term basis, if we get back below, or let's just say we start trading back towards 103, excuse me, my nose itches a little bit. If we get back towards 103, then that's also going to suggest that the equity markets or risk may bounce. Now, I don't want to say that the Bitcoin market or cryptos, like I mentioned before, is a one-to-one correlation with stocks. But I feel that if Bitcoin can finally find some sort of support, like let's say, and I'm going to go back to Bitcoin really quick. Let's say Bitcoin finds some support at the 127% extension, which once again is around 17,000. What is it? 17,500, 600. We find some support down there near term because I do believe Bitcoin is going to continue lower. But if we do find some support down here, and we bounce, that might actually help risk assets to bounce as well. Let's talk about the dollar, and actually let's talk about some of the things next week that are happening. Now, as I'm telling you this, I want to say that if you're enjoying what you're seeing here on YouTube, make sure you give us a thumbs up. My team and I appreciate when you give us a thumbs up, putting this out every weekend for you. Also, jump in the comments below. If there's something that you want to mention in your thoughts regarding Bitcoin, your thoughts regarding the stock market, jump in the comments. I try to go through the comments and address people's questions as they're coming through. So I can't get them all, but if you jump down there, jump in the conversation. Let us know how you feel, and it's not just for my benefit, but it's also for other people that are watching this week ahead show. All right, thanks. I just needed to make sure I mentioned that. Next week we have. It is a new U.S. holiday, Juneteenth, but there is a lot of Canadian data that's coming out. We have inflation data, which is obviously very important. We got a lot of PMI data points that are coming out in Germany. We have U.S. PMIs, that means European PMIs, UK PMIs. We have the RBA monetary policy meeting minutes, Canadian retail sales, and probably at the end of the week, near the end of the week, we also have the Humphrey Hawkins testimony. It's the semi-annual testimony from Fed Chair Powell. And remember, that is going to be, well, it's actually going to be Wednesday. It's Wednesday. I can't remember. I never remember if it's to the House or the Senate first, but it's basically a repeat, but you still have to watch it because Congress will ask Chairman Powell from the finance committees. You know, they'll ask Chairman Powell like certain questions, and it might be a little different on day two, even though he has the same speech. It might be a different question that wasn't asked the first day. So we have to be on guard. And then at the end of the week, we have University of Michigan inflation and consumer sentiment expectations and numbers. Those will be closely watched. Now, I know you might say, well, it's University of Michigan sentiment numbers. Is it really that important? You know, the sample size is what, 5,000 people or so? It is important, and 5,000 is a decent sampling, especially when you're talking about Middle America. Well, it's not just in University of Michigan conducts it, but it's important to understand what the sentiment readings and inflation expectations are from the consumer. We know that prices are hot, and they're probably going to continue to stay hot as we go into the July 4th weekend. I mean, you know, we've got a couple of weeks before the 4th of July. And that's when it's really going to hit the consumer, because you're going to get, people driving all over the United States. And I'm talking specifically here in the US, but you're going to have everybody here in the US keenly aware of price changes, because you'll have people that don't normally maybe go to the grocery store to go pick up food items. They'll go, oh my gosh, you know, things so expensive. I had to, you know, I'm feeding 25 people coming to my house for a barbecue, and oh my gosh, I didn't expect to spend, you know, that type of money. Or, you know, you're driving to somebody's home for a holiday, or maybe, family across the state, or maybe in a different state. It's gonna. That's when, you know, the consumer is gonna go, ooh, wow, prices have really, you know, gone through the roof. So don't think that everybody should be very concerned with how the consumer is taking this. And it's not just the consumer, it's also the rest of the economy. And that's why PMI numbers and data points are really going to start to matter in the months ahead in the U.S. economy, and globally for that matter. All right, but I want to talk a little bit more about what's happening in the currency market. Let's look at the euro. If you remember from 2 weeks ago, I had this drawn out. If you remember from 2 weeks ago, I had this 106, I think it was 106.30 to 108, and I said, hey, you know, the market's going to drive where we go. You know, above here or below here, we're going to break that trend line. At that point, it was that trend line, or we're going to break down through support. Well, obviously, support broke. Well, the thing about the euro, what you'll notice is we've actually held support. Now, a lot of you might say, well, that's a double bottom here at these lows. I wouldn't say it's a double bottom, but I would say that that's really critical support. And what's really forming right now is a wedge. But if you break above this trend line now, here, that becomes bullish. And really, it's above this level right here where you have a double bottom come into play. So, you know, if you think that the euro can't reach the 200-day moving average and beyond, really by forming this double bottom, if it does actually start to play out above this neckline, it does point a lot higher than the 200-day moving average. But really, the first goal for any European or Euro bull would be above the 106.60, 106.70 level. You can say 107. And if you think that the euro is heading back down to parity, then that means we do have to break this 103.50 level. And once that breaks, then it does open us up for parity. But I'm still undecided right now. I think that the dollar is at risk of a pullback, which means that the euro is at risk right now of a reversal higher. I think that is the risk at the moment, now that we've forged out these lows. But it's not just the euro that makes me feel this way. If you look at the sterling, we had a nice false breakdown this last week. False breakdowns usually lead to breakouts. Let me say that again. False breakdowns usually lead to breakouts in the other direction. So when the sterling gives us a false breakdown like that, that usually is a very bullish sign for the pair. Then you look at like the Aussie. The Aussie didn't create, it didn't create, let me remove this. It didn't create lower lows. It created, higher lows. That's a risk of a trend change now when you start to see that happen. Right? Kiwi as well. We had a false breakdown below these lows right there. And that false breakdown should lead to a, yeah, you guys know it, breakout, right? So you have like it's not just, like I said, I don't just look at the euro and I don't just look at the dollar index. I'm looking at other dollar pairs thinking that could happen. Now, why could the dollar continue to pull back? Again, we already know what to expect from the Fed. We had the FOMC last week. How about if something is said during the Humphrey Hawkins testimony? So as we come into Wednesday of this next week, you have to be keenly aware of what's happening in the markets because, or what's happening with the Fed chair, because if he says something that sounds remotely dovish, then we would be at risk of seeing a bigger reversal in the currency market. Now, before I let you go, if you guys haven't checked out the trader funding program, check it out. If you don't want to risk your own money and you want to risk ours, check out the trader funding program. If you don't have access to larger trading accounts, because maybe you don't have, you don't trade a fund. Maybe you don't have, larger amounts of money that you can access through friends or family or whatever the case is. Well, come check out the trader funding program. You pass an assessment and you make 10% in a demo environment and you don't risk more than 5% on a trailing basis, then you can access our accounts. And if you access our accounts and you trade for us, you keep 75% of the profits and you don't take any of the losses. So let me say that again. You take 75% of the profits and you don't take any of the losses. So if you want more information on the trader funding program, there's a 2-minute video right at the very bottom here. Check it out. And that's a 2-minute video with me. Whoops, didn't mean to do that. So check it out. Guys, gals, I want to say have a great weekend. Thanks for joining me today. Thanks for spending your time with me. And I'll see you on Monday on the F.A.C.E show on Juneteenth. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.